Well, good afternoon. It's time to wrap this up for July the 9th. Another day is behind us. We had a good trading day today. We were right on most of the markets. We had a little volatility to work with. So worst market was the euro, and the euro has been really tough to trade because of the lack of volatility and then explosive moves. Still best to trade the euro London time. Okay, we had the FOMC minutes. Taper is over. The taper will continue until quantitative easing is over. It ends officially in October unless we get a major piece of news. Interest rates being raised, not indefinite before they can get. Fed says they will be raising them at some time, but probably not as much as one would expect given their concerns about the economy. So sometime in 2015, unless the economy gets a heck of a lot better, the Fed will probably start raising interest rates, but not going to go to the moon. The economy, reading the minutes and everything like that, so-so. I mean, if you read the private reports, and we're going to get a good feeling for second quarter earnings now. Depending on what company they're plus or minus. Walmart says the middle class and the lower class are really getting hammered by current economic conditions, and you can believe that. The top 10% of wage earners right now are carrying the load, and they carry that in a lot of ways: taxes, retail spending, etc. So the economy will continue to concern the Fed. So here we are. We have ourselves an inside day, and an inside day usually yields a trading range the next day. So this 67.50 I think is a critical number. Whichever side of 67.50 we trade on is the next short-term directional move. We are in a very strong uptrend, whether you believe it or the reasons behind it or not. It doesn't really matter. We are in an uptrend, and the correction stopped before we even retested that move out of the middle or the next distribution that took the market higher, that came out of the 1950 area. So here we are. We definitely have a buyer below 58, and we may have a seller still above 67.50. It just depends on where we close today. So inside day yields trading range. Now we don't have a lot of news tomorrow. We've got jobless claims at the default 310 plus or minus. Tomorrow's call happens to be 311 wholesale inventories. No one will pay any attention to, plus 0.5%. And natural gas, I haven't seen the estimate, but it's been running around 105 to 110. So 105 BCF. And so that's probably about where it'll come in, plus or minus. So we can basically on this an inside day sell failure to take out resistance, buy failure to break support. F2 is going to give us, when we left on the last update, we said the F2 favored higher prices to the FOMC minutes, and I'll leave a K split that shows you that last period. So here we are. We had a P. We had volume well over time. If you had to make a trade on this distribution, the day session distribution, it would be from the long side, and it did produce a trade up. We talked about volume, most recent in the market's memory, kind of contained the rally. Then volume, most recent in the market's memory, broke the selling. So we said the market needed volume in this area, and that's pretty much where we were today. So looking at this, an inside day, it's okay to sell failure to take out the 67, 50, 70 area. And the second sell will be 74, 76. On the buy side, we're in the 60 area, so 60 plus or minus will be buy one. For Globex, we'll adjust in the morning, and then we're back to our 55, 57. Now, I'm a little more cautious on the buy side, especially at 60. I think we got a pretty good chance of hitting 1950 before this is over, but a lot of it's just going to depend tomorrow on how support at 55, 60 holds up. So I don't have any problems getting short in the 65 to 70 area, and right now pretty comfortable buying against 55, a little less so against 60. I just, right now I look at this rally and I see what it's based on, and I look at the news, and the news doesn't seem all that supportive to me. And the reason for that is that this market is traded higher off of quantitative easing, and the Fed has said that it's ending in October, as they've said it was going to end. So that's just kind of my gut feeling. Not that I can't trade from the long side. Okay, the note sold initially off the FOMC minutes. It's sold going into the FOMC minutes. Rumor fact trading situation. We've been looking for a retest of the 13-14 area all this week, and we finally got it. But you can see that we're in a bracket, and we got ourselves a seller above 25.08, and we have ourselves a buyer below 24.04. Today we have a higher low and a higher high. That favors higher prices tomorrow, and based on the fact that we got a 30-year auction tomorrow, I think we're probably going to see sideways to higher market tomorrow when it's all said and done. Otherwise, they eat more of the 30-year paper. Put an interesting article into the room this week on why the demand for bonds, why the appetite for 30-year paper, 10-year paper, etc. And the thesis of that is that there's not a lot of good fungible paper out there, and it's creating because the Fed has taken a couple of $1 trillion off the market. And because all this stuff is resting at the Fed, it's not available for the market for repos, collateralization, etc. And that increases the demand for it. Higher low, higher high favors higher prices. It's auction time. We favor the long side of the market during auctions, and the knob spread went out to 12. Now, we talked about this earlier. As of the close on Monday, that spread went out at 11. It's Wednesday afternoon. That's $1,000 move in 2 days. That's a hell of a trade. Don't forget this. Start paying attention to it. It's a great trade. It can make you some really, really, really nice money. And we have the dynamic of federal deficit spending that's never going to go away. It's probably going to get worse if the economy softens, and it's one way that we can prosper. Okay, there's a couple of things in the FOMC minutes that would make the note rally. One of them was economic growth concerns. And the other one was that interest rates wouldn't go up. When the Fed starts to raise interest rates, they won't go up as fast as a lot of people think they will, or as they've done historically. And the reason for that is economic weakness. A country's prosperity and growth is determined by industrial and tax policy, and what's coming out of Washington, D.C. right now does not favor growth. Period. So the Fed's hands are really tied in many respects. Okay, the trade, very easy to see, is sell-failure to get through 125. I think that's a reasonable trade overnight. And this breakout came at 24, so we'll make our first buy 21 to 25. With a 30-year auction tomorrow, we're liable to see a little bit of softness. Because of the auction, I like the long side of the market. Finally got down to retest this breakout at 13, which we've been looking for. We got it today. It held. The breakout is confirmed. At least cover your shorts. That's the mindset of the guys doing the trading. So we traded up. So selling failure at 125, I think, is the trade for the evening. Do like the long side. Going to try to scoop it up 21 to 25 if the E-mini weakens a great deal overnight, and I don't think it will. We'll have to pay up. And the 30-year auction is what will be driving the market tomorrow. Okay, the knob spread has come in a little bit. It was at 12 when I was taking my notes on the close. So, selling failure to take out 137, 37.04. I think it's a pretty good trade. For Globex only. I probably wouldn't be doing it in the morning. And the buy, we broke this thing out from 24. We're at 27 because of the knob spread. You know, I think I'm going to try to 17s to 21s. May have to pay 25s. Don't know. Try to buy it a little bit on the cheap. Play for a little extra volatility here. Then 9 to 13 for buy 2. Might have to pay 25s. Don't know. But that's the way I see it on the close. To be adjusted tomorrow. Okay, the strength in gold, dollar weakness. And let's go back and take a look at the F1 screen. Bring a little perspective into this. You can see we've been in a very prolonged sideways movement, and we've got this distribution that began over here, which is definitely a B. Top of value is at 1350. We had this rotate up here in the 1335 area, so we're at 32, selling 35 plus or minus. And then 40, 42. When it stops above 40, it'll be sell 2. On the buy side, we're at 32, so breakout came from 28. We'll make 25, 28. buy 1. And then 2023 buy 2. I don't, you know, the problem with the trading off the dollar is that one day it's up, one day it's down. And that's been a pattern. Sometimes it's down 2 days, but it always seems to come back. So, and I think the reasons given for selling the dollar most of the time are pretty weak. One of the funniest articles and one of the most ironic articles, given how hard China and Russia are probing the United States' willingness to stand up for anything and anybody, was the Chinese premier came out and said, you know, warfare with the United States would be catastrophic. And it's kind of, yeah, it probably would be, wouldn't it? Warfare with any major power tends to be catastrophic for the short term. Okay, crude has come off. We got another attractor down here at 101.33. We were looking for at least getting to 102.50, so we made it a 102 minus. And we'll make it 101.75, 102 for buy 1, and then 25.50 for buy 2. Okay, we've sold pretty hard. The cleanest break in the market's up here at 103. That's a stretch. Last rotate up was 38, and we're at 25 right now. So 50 to 75 will be sell 1. The mouse control just became super sensitive. Then S2 will be 103, 103 and a quarter. The tendency in crude has been a hard day of selling, some retracement, sell the next day. So if we don't break it early and break hard, probably going to flip to the long side of the market. And last but not least, you know, I think on the euro, just as hard as it has been to trade, I would just 136.50 sell, and it's a 136 even buy. I mean, it's just, this thing is just really, really, I mean, you just sit there and you sit there and you sit there, and then bang, if you're on the right side of the market, you look pretty smart, and on the wrong side of the market, you stopped out PDQ. And do not trade this market without stops. So if the dollar articles are true, then this area up here, the 36.75 is probably a pretty good sell zone. Right now we're at 50. We're at resistance, so we're going to make 65, 75, sell 1, give it a little upside room, and then we'll make 37 even plus or minus sell 2. I saw the articles. You know, when I read them and I look at, oh, the euro's rallying off of this. I mean, it's just tough for me to stomach. It's one of those things that, you know, your eyes see it, you read the headlines, it computes intellectually, it doesn't compute emotionally. And Fitz makes a great point right there, is that there are too many people that can pick up a mic on the euro dollar and get you in trouble. Okay, we're at 49, so the 20 to 30 will be our buy 1. I'm going to give it some room. I'm just much more comfortable short, and I know it seems like a personal problem to some of you, but can't help it. Just the way that I feel, based on the long-term economics. of Europe. So and Mario will be squirming once again as the Euro strengthens into the overnight session. Okay, I'm going to get everything posted and get it up. We'll see y'all bright and early in the AM, 6:45 Central. In the meantime, have a great evening, and we'll go look to shake that CME money tree one more time again. Fun, isn't it? See you in the morning.